what all incomes are tax-free under Section 10 of the Income Tax Act? Then you have clicked on the right video. Hello and welcome, I am Prarthana from Clear. We have assisted more than 80,000 tax experts and 6 million tax filers so far. Do subscribe to support us and get a clear explanation of financial concepts. And in this video, let me show you the regular incomes that exempt under Section 10 of the Income Tax Act. First and most common exemption that is claimed by salaried individuals is the house rent allowance. A salaried individual having a rented accommodation can receive the house rent allowance, also known as HRA. This could be totally or partially exempt from the income tax under Section 10. To claim HRA exemption, you need to submit rent receipts to your employer as proof. However, you can still claim the exemption while filing your income tax return.
HRA is partly exempt as per the conditions specified here. You can calculate the exemption amount by ClearTax HRA calculator provided in the description box below.
Agricultural income earned by the taxpayer in India is exempt from tax. Agricultural income generally means firstly, any rent derived from land which is situated in India and is used for agricultural purposes, or any income derived from such land by agricultural operations including processing of agricultural produce so as to make it fit for the market or sale of such produce, or any income attributable to a farmhouse subject to certain conditions specified in this regard. However, the Income Tax Act has laid down a method to indirectly tax such income. You can see the calculations on the screen.
This method or concept may be called the partial integration of agricultural income with non-agricultural income.
An employee can claim exemption in respect of leave travel concession. This exemption is available to all employees, that is Indians as well as foreign citizens, in respect of the amount of any travel concession or assistance received from his employer for himself and his family members in connection with his or her leave to any place in India. The amount of exemption is available as per the income tax rules, which can be availed for 2 journeys in a block of 4 years. The current block in calendar year 2022 to 2025. If no journey is performed, then no exemption is available. Death cum retirement gratuity received by government servants, that is central government or state government or local authority, is exempt from tax.
However, there is partial exemption for gratuity received by non-government employees. The maximum amount of exemption available to non-government employee is Rs 20 lakh if they are covered under the Payment of Gratuity Act. For other employees, the maximum amount of exemption available is Rs 10 lakh as shown here.
Are you now able to claim exemptions for these incomes earned during the financial year 21-22? If your answer is yes, please comment yes in the comment section below. Now, coming to exemptions under Section 10 that are available to senior citizens after retirement pension. Any commuted pension, that is accumulated pension in lieu of monthly pension received by a government employee, is fully exempt from tax.
Full exemption is available only in respect of commuted pension and not in respect of uncommuted, that is monthly pension. So uncommuted pension of government and non-government employee is fully taxable. However, a commuted pension in case of a non-government employee is partially exempt from tax as per provisions of the Income Tax Act. The calculation of exemption amount is different for employees receiving gratuity and those not receiving gratuity with the pension.
Leave encashment by a government employee at the time of retirement is exempt from tax.
Leave encashment received by legal heirs of deceased employee is fully exempt. However, it is partially exempt from the tax in the hands of non-government employee as per the provisions of the Income Tax Act shown here. The maximum amount of exemption is Rs 3 lakh for non-government employees.
Now, coming to the life insurance premium paid for which deduction is available under Section 80C. The maturity amount received from such policies is exempt from tax.
When the premium paid on the policy does not exceed 10% of the sum assured for policies issued after 1st April 2012 and 20% of sum assured for policies issued before 1st April 2012, any amount received on maturity of a life insurance policy or amount received as bonus is fully exempt from Income Tax Act. Also covered here are policies taken after 1st April 2013 on the life of a person with a disability or disease specified under sections 80U and 80DDB respectively, where the amount received on maturity is tax-free provided the premium paid does not exceed 15% of the sum assured.
Maturity proceeds of all other policies are fully taxable. Any payment received on closure of NPS account or opting out of the National Pension Scheme to the extent it does not exceed 60% of the corpus at the time of closure or opting out of the scheme is exempt from tax. Also, with effect from the assessment year 2018-19, partial withdrawal from NPS will be exempt from tax if the amount of withdrawal does not exceed 25% of the total NPS contribution, and partial withdrawal should be made in accordance with the terms and conditions specified under the Pension Fund Regulatory and Development Authority Act 2013 and the regulations made thereunder. Interestingly, PF withdrawal is taxable under certain circumstances and exempt under certain circumstances for an amount received from the statutory Provident Fund.
The employer's contribution interest credited and the amount received at the time of termination of service all are exempt from tax under Section 10. For an amount received from the recognized Provident Fund, employer's contribution to such fund up to 12% of salary, interest credited to such fund up to 9.5% per annum, and if certain conditions are satisfied, then lump sum amount received from such fund at the time of termination of service is exempt in the hands of employees. You can see the conditions mentioned on the screen. For an amount received from the Public Provident Fund, all amount received during maturity is exempt from tax.
However, it is important to note that no exemption shall be available for the interest income accrued during the previous year in the recognized and statutory Provident Fund to the extent it relates to the contributions made by employees under Rs 2,50,000 in the previous year. However, if an employee is contributing to the fund but there is no contribution by the employer, then the interest income accrued during the previous year shall be taxable to the extent it relates to the contributions made by the employee to that fund in excess of Rs 5 lakh in a financial year. Family pension received by the widow or children or nominated heirs of members of armed forces, including paramilitary forces of the Union, is exempt from tax in the hands of such family members if the death of such members of armed forces has occurred in the course of operational duty in prescribed circumstances and subject to such conditions as may be prescribed. I hope this video was helpful for you. For queries related to business or finance, you can contact our experts by clicking on the chat link that is provided in the description box below. Also, please don't forget to subscribe to our channel for more informative videos and stay tuned for more updates. Take care and goodbye.